Yes, Boyke, I do. Yep. Big crystal ball. Right, now. The other thing to look at too is this. So we've got the dollar index hitting resistance. We have silver hitting a huge area. This was resistance back in 2006, 2005, 2009, and we have this trend line right below that. So we've seen sort of this deflationary run on these metals, but hitting massive areas. Huge. So if I was a betting man, I would anticipate this zone, even if it drops into the 14s. If it drops into the 14s, that's fine. I still think that this is something that merits enough support that it's going to go back to 17, 18 area, which I'm actually happy to take that trade. That trade's got minimal risk and a lot of upside. All right, so dollar index, resistance. Silver, support. You know, gold, less interested. It's very, very convoluted. Okay. So we have a few things. We have a few things suggesting to us that our fundamental bias is about to be. Our fundamental bias, we're about to have the market run against it for a little while. Can you see that? So then we have to say to ourselves, right, the technical horizon now looks different to the fundamental horizon. For how long, roughly? I don't know, a couple of weeks, maybe a month. So we have that in the back of our mind. Is that, okay, we're now going to probably have to trade against our fundamental bias for a little while. Now let's think about the pairs that we want to do that. Right? And like I was saying to you, it's probably going to be stuff like the Aussie. It's probably going to be stuff like the CAD. More specifically, the Euro Oz. Right? You know, Aussie going to be weak, Euro going to be weak. Euro Aussie is a pretty good pair. Fundamentally, technically, good. Makes sense. I expect a little upside on the pound dollar. Lots of support coming up there. But what about maybe using an opportunity like this to look at something like the Euro Mexican peso? For those of you that don't know, the Mexicans have had every large car manufacturer and their uncle going down there to build their factories. And a lot of the US jobs that were being filled by folks coming over the border, those people have now gone back. We have droughts in California, and they're like, oh, we'll just go build some cars. So there is a little bit of inflation coming up down south of the border here. Okay, so the Euro Mexican peso is probably not the best thing to trade on the short term because we just looked at that dollar index and that's going to help the euro. But it's a good thing maybe to plan in the future. Okay. So here's a monthly Euro Mexican chart. And a sort of enduring impression here is this could potentially be a bullish flag, couldn't it? Possibly. But fundamentally, the message is different. And this monthly stochastic down like that tells me that it's only halfway done with this move. I just know that from technical experience. All right, so if I go to the weekly chart, it's showing a little bit of divergence here. We know that dollar index is coming off some things. We know that the real support, even if I look at it horizontally and the trend line is a little bit below here, we can probably take it to this level because of these lows. So I have a little fundamental bias down. My technical bias on the medium term is down. But I know that the euro is hitting some good resistance or good support relative to the dollar index. So maybe then I wait for not just a little sort of swing fib here. I wait for one that is a little bit more real to the next level, 1750. And my trade plan is to look to short that down to the support area of 1660. Make some sense? So I've got fundamental bias, then I've got time horizon and sort of area or where I am relative to that time horizon. Okay, and then I can narrow it down to a technical look. Then I got to start thinking about. How much money am I gonna commit to this? Am I gonna trade it with a stop loss? All right. Do I believe in this fundamental position? You see, my thing is, Boyke's question earlier on was, if I'm a swing trader, do I need to know all this stuff? And here's the thing, guys, is you have to believe, or at least for myself, I have to believe in what I'm trading. So even though I think, and I have it on decent authority, that this is a very good buy here for euro, sort of a drop out of this last thing here, 25.10 or whatever, into the early 29s, late 22s. Even though I'm thinking that this is for many reasons, a good long into the 26s, which is the better part of 300 pips, I don't believe in it. Does that make sense? Yeah, I'm happy to look at the S&Ps. I don't believe in it. So if I'm in this trade down here and I'm wrong and it kind of trickles down some more, I might panic and get out because I don't believe in what I'm trading. I don't believe that the euro should be stronger than the dollar, even though I see multiple reasons for it to go up technically. So that's why I like to trade in alignment with the fundamentals, because then I can sit there, shorting through here and going, fundamentally, my plan is sound. I've never heard of that, Boyke. Is that the thing is, it's depending on what you see, though. What do you see? Right? If I wait for everything to roll over, then I'm going to be seeing stuff pretty freaking late. I'm way more happy speculating on something I believe in and being wrong a little bit than I am reacting to something that might put me in an awkward risk situation. It's horses for courses. It's totally, I see merits to both sides. So it's like, the question was regarding the S&P. So let's look at that. This will illustrate your point. This will illustrate your point perfectly.